Hi everyone, Mike Smith here in this innovative presentation originally delivered as a webinar. What you are about to hear is how Leonardo da Vinci's unique approach to life and learning can inspire your trading journey going forward. And it's time to unveil the 7 secrets of this genius at work and paint your own masterpiece of trading success. Think about what each attribute can do in the context of your trading. And if you'd like a copy of the Da Vinci assessment described in the presentation, and just have a look in the description below about how you can get your hands on this. If at any time you want to support the channel through offering comments or subscribing, that of course would be sensational. But most importantly, hope you enjoy, learn, and take some action. Let's get into it. Welcome everybody to TraderIQ Da Vinci. It's fantastic to see you all here. And yeah, look, I'm quite excited, stroke amused, stroke curious as to how this goes down. It's one of those mic sessions really where you get a little bit of a different sort of spin on things. Whether you be a fairly new person to the scene and listening to me bang on about markets, the universe and everything, or whether you are a seasoned webinar professional, you're very, very welcome. Thank you to everybody who said hi in the questions box, as always. Now, many of you will see me talk about this. So we get market stimulus. We also have the same markets and we want some results. Okay, now to create those results, we have market interpretation, we have application developed systems and decision-making action. So essentially the bottom line is everything to do with creating those results is internal. So that includes our motivation and our rigor in developing new systems. It includes things like measuring what we're doing. It includes things like making sure that we're aware of and manage cognitive biases. It includes things like recognizing times when market risk is increasing and decreasing. Those of you again are in the portfolio will saw me took off JHX out of the portfolio today, simply because I saw the risk rising in the markets as a whole, just wanted to reduce exposure. So everything is internal. You've got the choice to work on these things or not. And of course, we all start at a basic level and work on these at different levels. Those of you who have had anything to do with TraderIQ or heard me talk before will probably have seen that before. So that is the reason why looking at different ways to look at how we can really accelerate the control that we have, that choice we have to manage this complex internal series of processes and interactions of many, many different factors to create an ever-improving outcome. So there's a couple of things I'm looking at this Da Vinci stuff. And then the thing that I'm also looking at on the side is I'm looking at the match of personality versus trading style. There is a couple of personality tests which are used, which may have some application to this. I went through the process myself that I'm working with, and it was pretty spot on in terms of where I sit as a trader, in terms of where my lane is, if you like, with all of the potential ways you can trade, stroke invest. So I'm doing a little more work on that. So watch for that next week. But I'm just going to do one thing at a time. Otherwise, I'll blow your minds too hard, too fast. So anyway, we're on about Leonardo. But what is it? I've had an obsession with this dude for as long as I can remember, really. Even at school, I tested history with a passion, and it wasn't my thing. But this guy got my attention. Once I discovered it did things beyond painting and sculptures, and I did a little more digging and just got fascinated by him. So logically, if we want to unlock our trading potential and recognizing and accepting that most of that is internal, then we need to look at the attributes of the ultimate minds. So how do those who have succeeded beyond all recognition have hit with a vengeance the title genius? How do they work? What is it that makes them do so well in whatever field they're hooking a stick at? Now, of course, Leonardo didn't actually trade because financial markets and MT5 wasn't in existence in Leonardo's time. But looking at how he operated, looking at the parts of that success stroke genius mindset has got to be worthwhile looking at. And of course, Mike does what Mike does, and so I've put that and put it in the context of trading. So that's the motivation behind doing this. So undeniably a genius, massive intellectual brilliance, exceptional range of talents, revolutionized the art world, also moved on. He just had this massive curiosity and scientific ability or acumen to explore anatomy, engineering, botany, numerous other fields. often centuries above and beyond his time. And we can see a lot of the way he thought, a lot of the way he viewed the life, the universe and everything, and his dedication and commitment to finding out, continual, insatiable desire for more knowledge and finding things out through the notebooks that he left behind. And he also had this, you'll have heard people before talk about, or maybe you won't have, that there's the science of trading and the art of trading. And I don't think the art of trading is particularly well defined. But you may have heard me talk before about critical thinking and creative thinking in terms of a trading context. Now, critical thinking is the logic, is the scientific method, is the inquiry from objectivity. Whereas creativity enables us to see the potential for different things, to go off in different directions, to poke a few bears and see what happens, to look at the emotional side of the decision-making as well as the cognitive side of decision-making. So that is one of the key reasons this combination of creative and critical thinking, which was his forte, that seemed to say, look, this is worth looking at. This is worth looking at in the context of trading. What lessons can we learn? There was many, okay? I think I came up with an original list of about 14. And I've narrowed it down to 7, which I think are really quite key. Now, some of them will be very familiar. Some of them will be reinforcing lessons that I've talked about before. But it's a different framework. It's a different spin on things. And sometimes, as a teacher, I've got to do that. I've got to look at different ways of explaining similar thoughts, similar ideas, similar practical sort of issues to enable it to stick, because people respond to different pieces of information in different ways. So that's where it all comes from today. So we're going to look at these 7 lessons that are, as I see them. And for each, we have a key Da Vinci question that may be worth your consideration, okay? I hope that sort of puts it all into context about the why behind it. Right, okay, so let's look at attribute 1, which is curiosity and continuous learning. So his insatiable curiosity led him to look at all sorts of different subjects, all sorts of different fields, and provided the opportunity for new discovery with a consistent hunger for new knowledge and personal growth. He wasn't satisfied with just knowing a little bit. When he had his interest tweaked, he would take it to the nth degree. I want to find out more. I want to find the next thing, and the next thing, and the next thing related to that. And now he had an incredible capacity to obviously do that in many fields at the same time, way beyond me or you would have. Certainly there's merit in honing down and focusing on particular types of learning, particular subtopics, but this curiosity and this desire to learn continuously for the whole of his life. Back to a trading context, if we take this principle of curiosity and continuous learning, traders should embrace curiosity. We should look at different ways we can find to trade. There is no trader that is exactly the same as another. We're all individual in the way we look at markets, in the access we have, in the way we think, in the way we interpret what's going on, in the way we interact with markets. Now, that doesn't mean we don't have systems that are solid and ambiguous, but what it does mean is that we can try a few things until we find something that's in our group. Let's take something really simple. A time frame that you trade may be very different. There are some who excel, though not many, at the very short time frames. There are some that excel on the very long time frames. But you've got to keep on having a look, making sure you're keeping yourself safe along the way, making sure you're continually adding to your knowledge, because of course that creates confidence. Make sure you're looking at or adhering to the principles of good trading practice in terms of having good systems, etc. Looking at the way price action, should have called it price action rather than technical indicators, looking at the way the market influences those at different times. We should continue to do this, but ultimately the aim is that we should find our own trading groove. And there is no way we can do that unless, A, we commit to being curious enough to have a look at different market contexts, and secondly, to commit to this continuous learning. I've been trading for 2 decades plus now, and I don't stop learning. Whether it's a new thing to look at, whether it's something else about me and how I interact with the market. I'm in an incredibly fantastic position in being able to spend some time with you guys. You guys asked the questions that made me think about, well, what's the next thing that I need to focus on and hone in terms of skills? So I'm forever grateful for that. So continuously learn about new market opportunities and developing systems that beyond just your trading plan, but developing systems that allow you to interpret markets better, to relate that interpretation, that assessment of market conditions in terms of altering what you do, to make sure that at all times your decision making is as good as it can be. And as I've already referenced, one of the key things that you need to study and you need to invest time in is looking at the way you as an individual are interacting with the market. So learning about self and how to optimize your behavior, your decision making. Because ultimately, if everything is internal, as we started off by saying so, then that obviously means that a great part of what we're going to work on is self. So the key Da Vinci question from this is, what is it that you must strive to learn now? Okay, that's going to take you from where you are now and the results you're getting to the next level. Because the results you're getting now are really a commitment, a commitment to work on those things you need to, which includes the learning to be able to do that well. Now, there's other issues about commitment that we're going to talk about later. But as part of that commitment, you need to find the learning. This doesn't come via osmosis. You've got to do the work on you. You've got to do the work on knowledge. You've got to do the work on continual questioning, both the critical and creative sides of you as a trader. Okay, attribute number 2 of 7 is attention to detail. It was famous for his meticulous attention to detail, not only in his artwork, but also the depth of the exploration when he was undertaking anatomy and science projects. And as you develop as a trader, we move to the idea, well, that market interpretation is probably one of the hardest things to crack at a high level. So that looking at market nuances, looking at how that translates to changes in sentiment, and I really need to change that wording, looking at the fundamentals behind assets. I mean, we've talked today about already, as we started, about the impact of something relatively simple like the rating agencies and what they think about the US as a whole. We're forever trying to make judgments on, as I did last month, about, well, looking at the information I have and looking at my judgment of it, then this is what I think is the more likely scenario in terms of earnings, in terms of the Fed. Now, the fact they've come to pass is great, but the reason that I'm in a position to do that is every time it happens, whether I get it right or get it wrong, I'll go back and have a look at that and just say, okay, well, what was it that I saw that made me think that? Was that correct? Were the assumptions that it brought into that decision robust enough? Whether they were right or wrong, thinking behind that's really important. Now, obviously, at a micro level and even at a very basic level of trading, what we've got to do is make a judgment not only on whether it's a good thing to stay in JHX or not to stay in JHX, or buy some Apple or not buy some Apple. Even at that basic level, what we've got to do is make a judgment. Is today the day that's a good day to do that? Or are the potential risks, the overall market risks, one where we should be actually reducing positions rather than increasing positions? And we're getting pretty close to that. If you're thinking of holding anything long term, then there are probably major risks to that over the next 2 to 3 days. After that, I think we'll be clear. But over the next 2 to 3 days, I think that is going to be the order of the day. And what that means is, if we're making that assessment based on some real deal facts about what's happening right now, we're not ignoring that. No, we're not ignoring those at all. Even on a sort of one trade level, what we're doing is we're integrating that into our decision making. We're not being impulsive and say, whoa, look at that chart. Look at that candle there. That's going mad. So we can sort of look here. We can say, well, look at that. There's a great bounce on that Kiwi yen thing. Let's get into that before we miss out. We're not waiting until it gets up here. Let's get into that. Or if we're looking at gold, well, we can look at gold and we can look at that short term. We can say, well, look at this gold chart here. It's going to do it. It's going to break it. Look at that. Look at that. It's going to break. There's going to be a flight to safety. Let's just buy some gold. You've been hearing me bang on about copper for weeks. And yet, and there's been a couple of short-term trades that I've taken on that in the portfolio. There was one on Monday, which went quite well, which you all saw. But even though I think copper's going to be in a good place long-term, I think the risk to the market over the next 2 to 3 days, or even the next week, are probably quite high. So why would I invest in a long-term position right now? I can play these short-term moves quite fairly easily. for copper. We could say, well, look, this is going down. So we could have a system that says, right, on a short-term chart, we're looking for a breach of yesterday's low. We got that early on, got thrown about an awful lot. And there's another reason that I wouldn't get into that as a short term to talk about, even though it did breach yesterday's low. So that was the day before's low. Yesterday's low was actually here, right at the end of the day. So that was the breach. So we'd actually been okay. But that was the trade we took. But I could have entered a long-term trade there. I could have said, right, I'm holding out long-term now. I like copper. I like copper for the next few months. But why would I want to buy it up here when I can buy it down here potentially when it stopped doing this? Anyway, not the right time to do a long-term in copper. But in order to make that decision, we need to have the attention to detail about what's happening in the market, reduce or avoid the likelihood of minimalization bias. And then, of course, that attention to detail should translate into your learning as well. We need to learn from the experiences that we have. This term experiential learning is really key in terms of trading, but we need to optimize that. If something happens, we don't understand it. If something happens in the market and it goes completely against the response, completely against what we thought would happen, then whether that is positive or negative for the results in the short term, what we absolutely damn well need to make sure that we do is we need to optimize that experience. What actually happened? What can we learn from that? And we need to continually do that time and time and time again, because that, even if we don't like what's happening, if we get what's going on, then we still feel in control. If we don't like what's happening and we don't know what's going on and we have no idea about what might happen now or next, then it's not going to put us into a great place at all. Confidence is going to be low. We know that relationship between confidence and discipline is key. You want to move towards reliability results. You're not going to get it unless you have the attention to detail in learning and in looking at the experiences of you and your behavior according to your, in relationship to your plan, and of course, the behavior of your system in particular markets. So your Da Vinci question, where are the gaps in having the detail of information, either in market awareness or in investigation of the success of your systems of you or self? I'm going to talk about IT behavior that you need to move forward. You need to move forward with if you're going to move towards trading purpose of reliability and results. So have a think about that. Where are those gaps? What do you struggle with? What do you not know? What are you not looking at that you should be looking at? I hope that makes sense. I hope that resonates. So attributes 3 is holistic thinking. So this idea of interdisciplinary approach is taking on skills associated with the discipline. So what are we doing in trading? Well, we're looking, we need to know some economics, we need to know some maths, some system thinking, we need to know sort of some psychology of how people act in markets, because we see that on a chart. That's what we're actually looking at. And of course, we need to put these pieces together. We've got 3 domains there. We've got market awareness, we've got system creation, design, we've got decision making. Those are the 3 domains we talked about before. We've got to integrate them together. There's a real complex interplay of factors that can influence price movement. And we need to start to get to grips with the relationships of A and B and C and how they interplay with each other. So this is involving macroeconomic factors, geopolitical events, market sentiment overall. You'll have heard me talk about before, and I think he even referenced it. One could be one of those occasions I said where good news is bad news. So if that jobs data comes in really hot, well, you would think that's great. A heap of people have got jobs. That's got to be good for markets. Well, no, because of the situation that we're in now with market sentiment in terms of, well, we don't want the economy to be looking too hot, otherwise the Fed will start smashing interest rates higher again. So it's understanding those relationships, understand the relationships between, say, US dollar gold, understand the relationships between the S&P 500 and the bond market, understand the relationships like that, which can, again, help you make great decisions. And then, on top of that, there's the other big part of this interaction of complex factors, and that's the interaction of you with all of these factors. Are you looking at the right things at the right times? Are you making decisions based on this thinking, based on putting those pieces together that are serving you well? And now on top of that, just to reference something that I sort of briefly mentioned before, if you've got this familiarity, this awareness of those relationships and what that is meaning and what that could potentially mean in the next few hours, days, weeks, then you can start to make some decisions, not only in individual trading ideas, but also in terms of your exposure in your portfolio as a whole. So is it time to go primarily risk off? Is it time to reduce position sizing on some of your trades? Is it time to potentially take some trades off the market, reduce your exposure overall? So all of these things are based on putting these pieces together and making judgments accordingly. Again, I hope I've articulated that relatively well so you get it. So just to sort of reinforce it, something for you to think about here is thinking about times where things happen. And what I want you to do is think about times where things happen which you didn't get, that were unclear, that put you in a state where you thought, oh, I really don't know what to do anymore. Or you had significant market events, which although the severity or otherwise may not have been predictable, they actually had an impact on decisions you made. And were those decisions positive or good or not so good? Okay, so let's take the example, or I've just given just there in terms of reducing. There are times to accumulate, there are times to reduce. So the biggest risk in terms of a whole portfolio is when the market turns on a dime. So generally speaking, at this stage, if we look at the S&P 500 daily chart, a lot of the market is long at this stage. This is the big risk time because you've got now people putting money to work and have done really over the last month. Even funds are starting to put more money to work because they're getting really uptight that the market's going to continue to do that. And their clients are going to say, well, look, the market's gone up 20%. Why have my investments in your fund gone up 20%? But of course, this is the time that it could do that, as it did back in late 2021. When it did this, when it tipped over and we entered from a strong bull market into a bear market, we lost 11% there in a little over a month, and very soon we were down over 25%. There is a risk. But what we need to do is we need to sort of be thinking, well, look, okay, well, we're feeling pretty good about where we are now, but now we've hit a point where we're sort of getting to an interesting place. Maybe I better switch some of my trading off, or some of my EAs off that work well in long markets, because what's happened is that signal line has gone over the MACD. Because you see that every time it happens, there's been a dip. So you could say, well, look, that becomes a switch on, switch off for a particular thing that I'm doing in markets. So you can find systems you can put in that will say, now is the time. Now is the time to dampen it down, or now is the time to put your foot on the gas. So what I want you to do is I want you to think about times where you didn't do well, either from a results point of view or from a confidence point of view or a quality of decision-making point of view, and look retrospectively at that and say, well, what should I have done? What lessons should I learn? And of course, when it happens again, it's always better to do it live. So see if those lessons that you thought you should have taken on board next time it happens are relevant. Were they on the book? So next time it happens, are you going to be in a great place to move forward and keep yourself in a good place? Meaning that ideally, your losses in a situation like this, you want to keep at a minimum, and then you want to be accelerating here. Are you actually doing that? Is that what you're seeing? If FX markets are volatile as heck, which they were during a lot of June, really, really hard for about three or 4 weeks there to actually do very well, because markets were choppy intraday. You would get if you were there at the right time, you would do okay. If you weren't there at the right time, you'd miss it out, and then the next trade that came along, you would get chopped out. Yeah, I would agree. I think you've got a real good synergy there, Alex, with the guys that you're working with. A fair few gaps to fill in, said Neil, but that's okay. Number 4, discipline and dedication. Obviously, the commitment that Da Vinci showed in demonstrating excellence in so many fields couldn't be possible without not only commitment to do the work in the first place, but also to keep on working, to keep on being dedicated, to find the right systems, the right things. So it's okay to do well, but could you do better? This was the quote that I was looking at. I've offended God and mankind because my word didn't reach the quality it should have. Now, this is from a man who probably excelled almost everybody else that's ever lived in terms of what he achieved in his time on this planet. And yet he still felt that. That's a testament. Now, I'm not sure that that's particularly healthy, but it did drive. It was the driver behind that. So perhaps there's a slightly lesser version of that, but it does indicate the level of commitment that's required. If you want to do really well at this, then it requires work at the front end, and a continued work. Is that continuous education, but also continuous work. Now, we're normally thinking discipline trading, merely the execution of developed trading plans on entry and exit. But through discipline is where this dedication shows itself. It's where it manifests itself in terms of the discipline and commitment to learn, the rigor in development and redevelopment and refinement of those systems. And of course, that includes the measurement, etc., which we'll reference in a while. And all of the good practices that we talk about frequently on these sessions that influence results. The bottom line is there are no shortcuts in achieving trading purpose. And those who try to do so rarely achieve optimal outcomes. By the way, there's a handout on this in the handout section if you want to download it. Let's do so. So, your Da Vinci question relating to this is, consider those things you must recommit to. The things that you're not really doing, you've let go a little bit. Do I really have to fill this journal? Do I really have to review it, like Mike said? Do I really have to work through this course that I bought and get the maximum from it? Or am I just going to sort of attend and learn by osmosis? Look at your trading learning. Have you developed a trading development plan that gives you an ABC of what you're going to learn and when? Have you defined what you need to work on next in your system? Have you asked questions of your journal? Have you done a proper review of it? How many times? So use the times. If you really need to, use the times you've strayed from what you should be doing and look at the results. If you're strayed from doing that course, well, are you in the position you could be? If you're strayed from following your trading plan, are your trading results reflective of what they could be? Use that could have done better as your motivation. So go away from this session and think, what is the number one must do that I haven't done enough of, haven't put in place? What is my number one thing that I must do if I am really, really going to demonstrate a commitment? Secondly, to take my results, my confidence, or whatever it is to the next level, that goal of developing systems which are more reliable. There's a little bit of homework for you to do. Problem-solving skills and adaptation or adaptability. This is really all about looking at creative ways to solve problems. And problems cross multiple fields in multiple situations. And this includes the awareness of actual potential risks, which we've already referenced to some degree. Now, in terms of Da Vinci, that there were actual potential risks to any project he was doing. And many of the things that he tried to do had barrier after barrier after barrier. I'm going to talk about that with another one of the attributes in a moment. But you can mitigate a lot of those risks accordingly. And that's obviously on a trade-by-trade basis. We're looking at management of capital risk and profit risk, and also reference portfolio risk, is what I put at the end. And these are fundamental skills. But on top of that, I told before about really the primary purpose of that first domain, that market interpretation, market awareness, is to be able to adapt your behavior according to what the market's telling you is happening. That's why it's so important to work on. And that's the reason why most traders don't, or one of the key reasons why most traders don't do well, because I think something is they ignore that. Certainly the concept of trading robots at EA is one of the issues around that. Is there are some market conditions where an EA might blow an account up. It might work for 90% of the time, but 10% of the time it has a hell of a ride. And you don't do the rigor and investigation you need to do in that, and you will get a reminder on the market that just wasn't good enough if you want to make a success of this. So we need to have responsive trading methods, responsive strategies, and this can lead us to have a competitive edge over other market participants. The fact that we follow trading plans, the fact that we refine systems, or the fact that we record and measure what we're doing already gives you a massive edge over most people who would trade. If you can then move to the next level again and start to develop things which are responsive to what's happening in the market overall, you're in such a strong place. Reliability results are not measured in a week. It's not how many trades have done well in a week or a month, or potentially even a year. Reliability results build up over time, and every time you look at them and you get consistency, then that does two things. First of all, it removes any recency bias from your thinking, and when you start to beat yourself up in a trade because you've had 4 results that go against you. But also it helps confirm that what you're doing is good, and starts to enable you to do things like scaling, which again we talked about before. So key Da Vinci question is: consider your historical adaptability to changing market conditions. Again, it sort of ties in a little bit. What are the things you should learn, things you should have had in place and to manage these to help you in your trading future, and particularly that issue of responsiveness. Are you responding in terms of what you're trading? Are you responsive in terms of how you're trading, in terms of position size you use, in terms of the number of positions you have open, in terms of the exposure you have in particular instruments? Let's take something simple. Do you have in your plan, well, look, I'm only going to have, if I'm trading FX, I'm only going to have 2 trades with the Aussie dollar in them. I'm not going to have more than, or if I'm trading indices, I'm either going to trade the NASDAQ or the DAX, never the 2 at the same time, or in risk-on conditions, I'm going to trade them both and go for gold. Okay, number 6, persistence and resilience. I've talked to resilience before. It's very easy to give up sometimes when things get hard. It's very easy to use the excuse, oh, it's too hard, I don't want to learn that. And to really feel that. But of course, Da Vinci had remarkable achievements. And the reason he had that is that he kept on going. But also combined with that was the ability to bounce back. And every time you bounce back from an event, and Da Vinci certainly, there was a couple of quotes again, which I should have put up. Again, Da Vinci referenced this a couple of times in the strength that he felt every time he was able to overcome an obstacle and move to the next level despite setbacks. It just made him stronger and stronger and stronger. That resilience, that trading resilience that you can develop, to put this into a trading context, is critical for long-term success. You're going to have times when you make mistakes. There are going to be times when you're feeling emotionally challenged, your confidence is possibly low, you've had a succession of losing trades. But the ability to say, right, it's okay, I managed that tough time. Our markets were difficult to trade. I managed to retain my capital, took a small loss. I did have a few losses on the spin, but I managed to come through that. And now when it's in a position where I can just dump my foot on that accelerator pedal, I'm in an even better place. Because I know that next time that I have those 3 or 4 losses in a row, it's really hard for a new trader to deal with this. If you have that 3 or 4 or 5 or 6 losses in a row and have the ability to come back from that, then you can see losses for what they are, a natural part of the trading experience. And in many ways, a necessary part of the trading experience. You need to have losses for 2 reasons. You need to have losses, first of all, because it enables you to make assessments on how robust or otherwise your system is in moving towards your purpose of reliability of system. The second thing is that if you have losses occasionally, it reminds you that overconfidence is not a good thing, that you're not a trading superstar stroke superhero, that you shouldn't wear your underpants on the outside and put a cape on, that you can't feel the market, that you do need to be as rigorous when you have a succession of wins as you do when you have a succession of losses. All these are vitally important. So we need losses to keep us grounded, and we need losses to celebrate when we do have good times. It's equally as important, it is equally successful as a trader to manage the loss well as it is to take a win. So even if you have good result after good result, good week after good week, good month after good month, the market's going to get up and give you a slap occasionally. You're going to have times when things move away from your norm. Your ability to bounce back from that is crucial. Now, in terms of your learning, and other things like system development, it's critical you develop small goals. One of the key things that we need to do in anything is we need to make the big seem small. If we can break down a big target into small goals, and you'll hear me talk about this time and time again, then what that does, it enables us to tick them off. So that excuse that, oh, it's too hard, it's too big, doesn't become a valid excuse anymore. If you look at where you are now as a trader, stroke investor, you look at what you knew 6 months ago, 12 months ago, compared to where you are now. My guess is it'll be very different. If it's not very different, we need to look back. And if your results are incredible, then you don't need to do any more work. My guess is for most of us that isn't the case. My guess is for most of us, we could do better. My guess is for most of us, we could learn something else which is going to add to our game. The reality is the experience you have had in learning successfully, in developing systems successfully, in starting to look at yourself and work on some of the things you need to work on successfully, those are all evidence that it's not too hard. What it is evidence of is that you can do this. But what you need to do to enable you to do this is to break it down into manageable steps, call it goals, enables you to celebrate achievement as a tick off, knowing that you're moving further towards the trader you can become. And secondly, of course, to make sure that you're doing all the things and that you're not missing stuff. And it's motivating. If you have this sense of continued success, continued achievement, continual small ticks, it's going to enable you when things do get a little harder. You've got something that you just need to bend your mind around a little more. It's not going to be too difficult. It might be difficult, but it's not going to be too difficult. So your question is, do you set trading goals to guide your development, provide motivation to continue to the next level through having evidence of growth as a trader? Are you setting goals? Are you setting goals related to your market awareness? Are you setting goals towards your system creation development? Are you setting goals towards your management of your decision making? Now, for those of you who've done TraderIQ, you've got an assessment form there that you've completed might be recently, might be in the dim distant past. Go back, have a look at it, do it again. There'll be a nice benchmark for where you are now and to set some goals around. Also, because I'm a nice guy, what I've done is I've put together a questionnaire called a Da Vinci assessment. So what I've done is I've taken all those attributes and I've given you a self-assessment to do. Isn't that cool? So what you need to do is you need to work through these 25 things. And you score yourself 0, 1, 2, 3, 4, depending on whether you've got it in place or do it never, rarely, sometimes, often, or always. Okay? And you do it for each of these attributes. And as you complete them, you can do a 1, you can do a 0, you can do a 3. Take that back. 3, 2, etc. And you get a Da Vinci percentage. Okay? So what I want you to do, first of all, I think it'll be a great thing for you to do because it's a great thing you can use to start to get clarity on what you need to work on, start to know what priorities may be, start to work on some goals which are going to enable you to move through some of these things. Just reinforce those key messages that perhaps you're in you, and I've just nudged you a little bit to let you know about. What I do want you to do, spelling mistakes and not spelling mistakes, and I do see a couple in this. If you can't download it, it should be in handouts. If you can't download it, email me. So you just need to go into downloads and you just need to click on Da Vinci Assessment. Go XLSX. You just need to email me. I couldn't download it. You probably won't be able to on a phone. Say, can you send me it, please? Now, what I want from you, I've invested quite a lot of time in this session. I quite a lot of time putting this on because I want to produce something that's wonderful. But I was hoping that because you're such a nice group of people and you continue to demonstrate that you would give me some feedback. Give me some feedback on tonight. Give us some feedback on how the assessment was. Was it useful? Was it not useful? You can send it through. I'll have a look for you. Maybe suggest resources if you want to. Those of you who are doing the Top Gun coaching program, you definitely need to do this. It's a very good thing for you to do. Chris, if you look in your control panel, you'll see something that says handouts. You'll see two things in there. You'll see the PDF of the slides from tonight, and you'll also see this assessment. So have a look at that. Finally, you're not going to get any jump from me without having something on journaling and record keeping. Da Vinci maintained detailed notebooks, allowing him not only to record his observations and ideas, but also gave him the opportunity to evaluate the process, provide evidence for refinement. Remember, anything that you do, the more evidence that you can create, the more you believe in what you're doing is right. You believe in what you're doing is right. You have confidence in your system, confidence in you as a trader, self-efficacy. And there's another thing I'm working on the side as well. These are all absolutely critical in terms of ongoing achievement at the highest level. And it is no different in trading. Traders can and will always benefit from maintaining a detailed trading journal. And I reckon 40% of those who come across me actually do it in any way, shape, or form. And I reckon 10% of traders do it. With any, apart from looking at the basic numbers, which are important, you need to, such as profit loss, win ratios, average win, average loss. Those are your start point, but you need to know underneath what creates those numbers. Analyzing past trades, creating patterns of performance, creating patterns of how things performed in certain ways, both you and your systems in certain market conditions. And of course, feeding it all back so that you alter behavior accordingly based on evidence, not on whim. Now, also, this is a big stretch. If you've got the general trade journaling sorted out, next levels are two things. First of all, you start to journal the non-trades. So you start to look at the times when you didn't get into a trade, either because of an element of your system or because of a thought that you had, or because your market condition, you thought market conditions were trading. Start to have a look at that. And the other part of your journal is to start to look at journaling you, look at journaling your journey. Because again, that can provide amazing feedback in terms of where you are, what you're doing, how you're coping, what you need to work on next, what your priorities should be, what your challenges are and are not, and whether your focus is in the right place. And of course, evaluate any of your associated systems and things like time management you've talked about for all that kind of stuff. So be the ultimate record keeper and evaluator. And it will serve you well. Even at a basic level of journaling, the practice of journaling is one of the most influential factors in trading growth. Two systems are crucial: the trading plan that is specific and unambiguous, and a journal which measures the success or otherwise of you in following it, and of course, your system, various parts of your system. Are you collecting the right information to serve you well? Is the question. If you want to know whether one strategy is better than another, let's take it at a simple level. Are you actually recording in a journal, assuming you're keeping a journal, which strategy you use? Is it a breakout? Is it a bounce? Is it a trend continuation? Because if you don't record that, you can't make a judgment of whether, well, look at, maybe having 80% success rate on your breakout trades and 20% success rate on your bounce trades. But you won't know that unless you actually measure it. So that's what I mean about, are you collecting the right information to serve you well? If you're collecting information already that says, look, this is my overall performance of all the strategies I'm using or all the instruments that I'm using, that's great. As a first stage, that's great. Maybe think about looking at strategy versus strategy. Maybe look at instrument versus instrument. Okay, there we go. So as with any learning, you now have a choice. You could have attended this webinar. You could say, oh, yeah, that was interesting. Mike was rambling on, as he does. Learned some things that are probably quite important there, but I'm actually not going to do anything. So that could be one choice. The other choice is you say, right, okay, let's take this seriously. Let's do that blimmin' assessment. There's more homework, but I'm going to do it anyway. Because I'm going to follow through. I'm going to try, because I think that if I do that, if I continue to follow through, if you have that discipline and commitment that Leonardo had, you follow through, make it happen, then you do have the chance to create an improved trading future. It's your choice. It's your choice. So ask the 7 Da Vinci questions. You've got those in the handout. That's great. Prioritize which you're going to work on first. And now, just as a tip, usually the one that's going to have the biggest influence is the one you start with, but that's often the big thing. But just eat that frog, as Brian Tracy used to say. Create yourself a development plan. Move to the next level over the next month. It's really that simple. And use us as a resource. Feel free to email me personally at mike@TraderIQ.com.au. I will point in the direction of resources. I will point you in the direction of courses that will help. Yes, right. Thank you very much for honouring me with your attention and your contributions and your comments and your Mickey taking and everything else that says, yeah, we're here. I love the interaction. I think you guys are sensational. It's a pleasure and a privilege, as always. So I will see you very soon. You guys take care, trade safe.
And see you again soon. Bye-bye for now.